This is CC. Welcome to the Orbit. It is Friday, December 29th. We've got futures unchanged into the final trading day of the year. And we're looking at an expected move, a 0 DTE expected move of about 0.4%, which is basically as low as we've seen it even during this low vol period. Looking out into next week, January starts off with extremely low volatility. Part of this, see this 8 IV for next Tuesday. Part of that is accounting for the 3-day weekend. Market makers will lower volatility to make sure that they don't get plugged with a bunch of premium and decay into a 3-day weekend. And that's what you're seeing there with an 8 vol that's already happening. And then coming out of that, volatility really doesn't pick up, and this includes next Friday with a non-farm payrolls number. So expect to come in next week on Tuesday and see this volatility pick up a little bit, but options are, pricing low volatility even out a couple of months. We see these low IVs, the 11s, 12s, it starts ticking up. And then finally, when you get out into April and May, you start to see volatility back to 15. And this is at the money IV we're looking at on this chart. And then an expected move of about 7% out until May. January and February vol are quite low, and this is a hangover from this rally and volatility getting crushed into year end. So if you are a trader and you're looking for opportunities, those first couple of months of the year are not penalizing you for going out a little bit in time. You do not need to be right the first week of January. As far as how 2023 went, you can see it on the chart. The SPY with a basically powering into year end with a more than 16% rally, taking the index up over 20% on the year. Qs are about 50% on the year. And of course, you know the story there. They've been powered by some of the mega cap tech stocks, reversing what was a really bad year in 2022. And 2024, especially at the beginning of the year, we will be looking at some of those small caps, and the IWM and the Russell 2000 is one of the ETFs that is not back to all-time highs. And so all eyes will be on that. It's been hovering around just above this 200 level into year end, but you look at that rally and it's already taken out what was that double top we saw over the last year or so, and but it is still shy of its all-time high, so that's something to keep an eye on. The other story of 2023, of course, was the bond market, and we're going to look at TLT here. It is back to 100, and what a year it had been for that, and that is basically the story of the stock market. TLT declined as bond yields were spiking over the summer, and then once yields reversed and came lower, TLT found a bottom and ripped higher in a straight line back to 100. Of course, that will be what traders are looking for, is have yields found a new spot to settle in, or will yields continue to fall? And then, of course, obviously, will the Fed actually lower rates over the next 6 months or so? And if so, under what circumstances into the spring? So TLT, we're looking at even out until May. We've got an expected move of about 7.6%. And obviously you can see where that corresponds to on the chart. It's not even halfway of this sell-off and then reversal, but that makes sense. And especially now that a lot of that volatility is out of the way, one wouldn't expect a huge move in bonds and yields like we have seen over the last few months. So that's the look into 2024 and a little bit of a look back on 2023. I hope everybody has a great New Year holiday. We'll see you back here on Tuesday.